Okay folks, welcome back to the channel. Here we have an NQ price action study and price action review. Possible trades that could have been taken on this pair on date recording 25th of April 2024. So again, what we have here is a H4 time frame, or the 4-hour time frame, and we quickly begin to depict our structure, our basic market structure, starting from this high over here. We had a clear breaker structure over here. Again, what decides a breaker structure is quite simply whether price breaks with a body or not. So here we have a body break over here, very important to understand. This is our body break over here, not this wick, but this body break over here. And now from here, if I quickly now go to the right, we also have another breaker structure just over here. Now this high essentially was created by this low. And so this high now creates a new low down here. So we had a bearish breaker structure, and a lot of this bearish activity began in April. So this was sort of the end of March. Going into April, we've had a bearish month, right? So now what we've had is we've had a clear breaker structure to the downside. And so from here, we need to understand there's 4 things we look at when it comes to understanding the narrative in price. There's 4 main things we understand. The first is our structure, which I've just depicted. The second is going to be our dealing range. The third is going to be the premium and discount arrays, or the PD arrays. And the 4th thing we want to understand is the fair value gaps, which give rise to our POI. Or our points of interest. So this here represents the basic 4 pillars as to how we're going to depict the markets on the higher time frame. So again, this is the 4-hour time frame of Nasdaq. And so from here, if we begin to go through them on order, what we have is our structure, which is bearish. So we have this structural high down to this structural low. So pricing wise, we have 18,474 down to 16,966 roughly. So this is our dealing range, and our dealing range can be further heightened by the fact that we can project the Fibonacci tool from the swing high of this range down to the swing low. And so by doing this, we essentially establish our dealing range, which is broken this low down here. This new low is broken this low. And we have what we call the equilibrium. So if I quickly bring your attention to the right of the screen, this 50% level represents the EQ, or the equilibrium of the dealing range. And anything above the equilibrium is essentially what we call a premium. And anything below the 50% level is what we call a discount. And so with that being said, we need to understand where we are in price before taking any buys and sells. So what we have, as we're below a H4 low, this is a 4-hour low, right? This is the old 4-hour low over here, right? We're currently below this and we're in a discount. So from here, the narrative of this particular position, the narrative of this particular buy trade, which we're going to be dissecting, was for price to come back up into the premium. So we're trading from premium to discount over here. This is essentially one of the interbank price delivery algorithm formulas, right? The interbank price delivery algorithm, or IPDA. IPDA works from premium to discount. So we understand the PD arrays we look at. And the second thing we look at is the price market wants to rebalance buy side and sell side inefficiencies, or fair value gaps. And we see fair value gaps over here. So we see a fair value gap over here, which I'm going to label in blue. This is a fair value gap in the premium. So we understand markets move from discount to premium, premium to discount, using these 4 things to build a narrative. And these are the 2 main things which IPTA, or the interbank price delivery algorithm, will target. So with that being said, now that we've set the tone, or we've identified a narrative going from discount to premium, let's see how we could have got involved in this particular trade, in this particular market. So what we have over here is now the 15-minute time frame, where we do the exact same thing. We analyze our structure. So what we had over here is we had a bullish shift of structure to the upside. So what we saw is we saw this high over here, which I'm labeling now as we speak. This high over here was broken. So we see a clear bullish breaker structure to the upside. This bullish breaker structure gave rise to our sells, because we understand now we're bullish on the 15-minute time frame. So again, if we understand our PD arrays, our simple premium and discount arrays, if I erase that, this is the 4-hour low all the way down here. So this is our 4-hour low, and this is the M15 structural high all the way up here. So what we want to do is we want to project the Fibonacci tool from the swing low up to the swing high, just like this. These are the Fibonacci settings for those who are interested. These are the Fibonacci settings you need. And so from here, what we want to do now is we understand price has given us a discount. So again, this is our equilibrium, the 50% level. We see that price has dipped down into the discount. So we have our discounted low. The discounted low has been achieved. M15 discounted low right here has been achieved. And so from here, when we see bullish momentum, we understand that, remember the H4, remember on the 4-hour time frame, our narrative which we created was for price to get up to this region over here, the H4 premium. So we're taking buys in line with that. Okay, so here's how we could have got involved in a potential buy trade. Let's understand how the markets actually behave today. How can we depict price? How can we depict price? If we now go down to the 5-minute time frame, let's begin to see. So what we had is we had an Asian range or an accumulation just over here to the left. This yellow box here represents the Asian range. And we understand the New York midnight opening price over here, which I'm going to draw a line to. This line over here, this dashed line over here, represents the IPTA interbank price delivery algorithm reset time. So this reset time is very, very important. And this is midnight New York time or midnight Eastern Standard. Very important you calibrate this to wherever you are around the world. And so from here, we understand that the London session and the opening of that news event we had at 8:30 Eastern time is what projected a bullish manipulation up here. So this here represents what we call a bullish manipulation. This move here entices those early buyers. So we see the London session rally down, but then rally up. And this here is a bullish manipulation. This entices those early buyers into the market. A quick tip when it comes to trading futures, such as ES, NASDAQ, the US 30, etc., indices market. We typically want to see the Judas swing, the ICT Judas swing, or the low of the day in a bullish market after news events at 8:30 Eastern time, right? So this volatile news event, this large wick and inefficiency to the downside, is essentially a news event that's occurred at 8:30 Eastern Standard Time. So this here is what represents a manipulation. This is a manipulation of the market. This wick over here is buy-side manipulation, right? Enticing those early buyers into the market. Now from here, it's from here at this point that we identify our Judas swing, right? So this Judas swing down here is very easy to depict if we understand what we're looking for. So again, if I quickly mark this up as the Judas swing, this Judas swing typically represents or is the low of the day in a bullish market, in a bearish market. So we understand we're below the interbank price delivery opening time. We're below the New York midnight opening price. And so from here, it becomes quite simple, right? We're simply looking to key off a fair value gap after a shift of market structure. So what we're looking for on the right of your screen, what we're looking for is for price to do this. We're looking for higher highs and higher lows, lower lows and higher lows. And then from here, we're looking for a shift of market structure for us to key off a fair value gap, right? This is one of the easiest and simplest ways to identify a Judas swing. The most important thing is to pair this particular entry model with time. This is very, very important to understand. You want to depict this model with time. So once we've had a shift of market structure to the upside, we've seen a clear shift of market structure, right? Represented by MSS or market structure shift. We see the same thing over here. We see a structural low, structural high, structural low, structural high, structural low. And this impulsive move represents the shift of structure. So I'm going to mark the shift of structure over here. This is the best and highest probability shift of market structure over here. Again, what we have is a fair value gap that's been produced. This here represents our fair value gap, which I'm going to label in blue. So this fair value gap in dark blue isn't just any old fair value gap, because we understand fair value gaps exist everywhere. So what makes this fair value gap an interesting one, or one that interests us to enter off, right? What makes this particular order block or this fair value gap of interest to us? It's a time-based fair value gap, right? So ICT concepts relies heavily on time. It's time and then price, right? So you want to ask yourself, what time has this fair value gap presented itself? When is the fair value gap presented itself? So this fair value gap presents at 3:10 UK time. So again, this chart is calibrated to UK time. This is 10 past 15 o'clock, right? 10 past 3 in the afternoon UK time, which calibrates to 10:15 Eastern Standard Time, right? So we understand intuitively that there will be the most amount of volatility in the New York session, as this is the NASDAQ, right? Top, companies in the United States. So we need to understand that at 10:15 Eastern Time is when the order block essentially established. We had a breaker structure and a fair value gap that was established, right? So from here, when it comes to entry, the only thing you need to understand is three main steps, three critical steps from this point. Let's quickly label them, right? Three critical steps. We want to have a clear shift of market structure, MSS, which is what we have over here, represented by the arrow. The second thing we want is we want a fair value gap within a specific time window, right? Within a specific time window in that New York session, we have the fair value gap that's produced itself. And the final thing we want to look for is we want to look for PD arrays, right? And what do we mean by PD arrays? So we understood on the 4-hour time frame, we were essentially in a discount trading towards the premium. But PD arrays can be applied even down to the 5-minute time frame. And this is how we do it, right? The same way we did on the 4-hour time frame, the 15-minute time frame. The markets are fractal, so the concepts are applied down directly. So again, what we have over here is we have a swing low down here, and we have a swing high up here. So notice how if we zoom into price, yes, we had a fair value gap over here, but this was not below that 50% level. Remember, the 50% level is over here. So we want to be trading beneath, we want to be entering below that 50% level. Again, we have a fair value gap just over here. So our job is very simple, to key off this fair value gap. The Judas swing the Judas swing represents the stop loss position. So the stop loss is ideally at the Judas swing or slightly below the Judas swing. Give your trades room to breathe. Very important you do that. And from here, your minimum target should be the inefficiency left from the news event. But remember, we have liquidity that's been left from London, right? The London high is a clear liquidity pool that we want to target using this specific entry model, right? So this particular entry model gave us a nice 1 to 2.5, 1 to 3 hour trade. And as you can see, the potential of the trade was quite large, right? We understood that if we're trading in line with the higher time frame, targeting that 4-hour premium, we understood we had almost a 1 to 10 hour trade following a very simple accumulation, manipulation, and distribution.